Hello and welcome to the channel. If you're new, please like and subscribe. Right, today's video is about a new simple growth portfolio on Invest Engine for ETFs. On my prior videos, I showed you my diverse growth portfolio, which had, for example, in there Germany, Spain, some IT and defence, where this simple growth portfolio is if you don't want to have too many ETFs. I have still diversified it, which I'll show you. I'll go over the titles first and show you that it is actually diversified, because a lot of people, they'll just invest only in the S&P 500 or the all world, which is fine. But let me show you what I've decided to do. So I've gone for global quality dividend growth. I've gone for gold, which I kind of think of as my little cash pot, because that usually, well, the last few years has done about 25% a year. So you know how your pension pots are, say, 70% in equities and 30% in bonds. This is my version of a bond, because I don't like bonds, but I do like gold. And a lot of foreign countries are investing in gold at the moment, so it's a really good return. I've also got Europe in here, excluding the UK. My other portfolio had the UK in, this one does not. Well, it might be a little bit in the all world. So the next one is the all world high dividend. And the next one I have is core world. The next one is the FTSE all world. The next one is the Nasdaq 100, which is tech. The next one is the S&P 500, which they call like the benchmark. And I've also put S&P 500 IT, because that's good growth at the moment. So right, the cost of the portfolio is 0.21%, so that's really low. That's quite good. And the dividend yield is 0.70. Now, there are dividends in here, like I showed you at the top. Well, there's two. There's dividend growth in here, all world dividend. This isn't focused solely on dividends, though. I do have a dividend portfolio, which I'll have to make the video over the weekend, because I'm just waiting for the orders to be processed on that, which is focused on the dividends. So, but like I say, it is more diversified than just holding the S&P 500 or, you know, the FTSE all world. So, right, I started off just by putting £50 a month in this, and we'll see how it goes. Right, let's go into more detail then. So I'll go over them one by one. So this is global quality dividend growth, and the yearly return so far is 5.29. And if you want to see the average, you can either look at how many years it's over. So that's since March 23, and take the 32.52% and divide it over the years. Or alternatively, down the bottom, there's a key investor information. You can have a look on there, and it will tell you the returns for the years. Right. So this gives exposure to high quality dividend growing companies from around the world. It gives a dividend yield of 1.44%, which isn't loads. It's paid quarterly, and there's the cost there. Let's see what's actually in here. So you have 474 holdings. And let's have a look at the regions. North America, Europe, bit of Japan, little bit of UK. And the sectors, we've got industrial, tech and financial. It's quite a good split on that, actually, because these three are normally the ones that are making money. So that's that one. And dividends are a good one to have because when the market's volatile, they don't go down so much, and it's always great getting dividends. So, right, let's have a look. Right, the next one is gold, which I've mentioned before. So the year to date is 31.94%, which is brilliant. And then the max, there we go, January 2016, and that's the return, 235.48%. So like I say, I use that. I think that is my little cash pot. So it's good to have in there. Right, this is the Vanguard developed Europe, excluding the UK. So I think it's good to have some Europe in your portfolio. As you can see, 9.34% for the year is doing better than America. America's a bit up and down this year. It's not, well, it is this year because of all that's been happening in the news. So that's why America's more like 5-6%. Right, and again, if you want to do the max, you do the percentage divided by the years. So let's go over it quickly. Large and mid-sized companies from developed European countries, excluding the UK. So dividend yield 0.79 paid quarterly. Cost is 0.10. That's really low. Let's have a look what's in here. So 383 stocks. You can see the top ones here. And then we've got the regions, Europe, and 6.3 for the rest of the world. And the sectors, we've got financial at 25, industrial at 15, tech at 6.8. What's also good about European and UK stocks, to be honest, they're not as pricey as the American ones. So, and like I say, they're doing pretty good this year. So let's have a look at the next one. One of my favourites, VHYL, All World High Dividend Yield. So this normally does a similar return to the S&P 500, but you've got dividends in here. So this is why I like it. So you can see it's higher at 9.25% for the year, and on average it's about the same as the S&P 500 over the years. So there we go, January 2016. So large and mid-sized companies from around the world known for paying higher than average dividends. So 1.91%. It's not a massive yield. So like I say, anything over 2% I think is good. Paid quarterly, and the cost is 0.29%. And then if we go down, so here you can see the usual suspects aren't here, but you do have good strong companies that are more dividend focused, like Johnson and Johnson and Procter and Gamble. JP Morgan, they normally have a good yearly return. I hold that in my stocks portfolio. So you've got 1802. So you're diversifying your portfolio by holding different stocks. So let's go to regions. 43% in North America, 17 in Europe, excluding the UK, 8.9 in Japan, 7.6 in Asia, and 7% in UK. So even though I haven't chosen a dedicated UK ETF on my front screen, you can see there is a little bit of UK in there. So sectors, we've got 24.5 in financial, 21.1 in industrial, 5.7 in consumer. Oh, look at tech, 4.7. So again, it's about being diversified. All right, let's look at the next one. So this is another world one. So let's look at the year, 7.49. So similar to the S&P 500, but doing a bit better. Let's have a look. Max, 139% since January 2017. That's a good return. Broad range of developed markets around the world to provide diversified exposure. So cost is 0.20. 1,265 holdings. This looks like the usual suspects to me. And then we've got the regions. That's 69% in North America. That's quite high. I don't think I've seen one that high. Europe, 13.3%. So look at sectors. Industrial, 25.5%. Tech, 20.3%. Financial, 17.1%. And consumer, 8.8%. Okay, let's look at the next one. So this is the Vanguard FTSE All World. Let's see what it's doing for the year. So 8%, better than the S&P 500. And then over the max, we have since February 2017, 115.38%. So it's exposure to a wide range of companies from around the world, including both developed and emerging markets. Now, I haven't gone over emerging markets, so it's in there on this one. So dividend yield 0.96, dividends paid out quarterly, cost of 0.22%. Right, so we've got nearly 3,000 stocks here. Usual suspects there. Let's have a look at regions. North America, Europe, Japan. Sectors, industrial 24.3%, technology 18.3%, financials 15.8%, and consumer 7.7%. Right, let's go back and look at another one. Right, you can't talk about a growth portfolio without having the Nasdaq in there. So the Nasdaq 100 is tech. So for the year it's at 6.32. And then if we look at the max, so since May 2016, 438%, that's just mad. That must be over 40% a year. Yeah, so that's really good, isn't it? Yeah, so it's based on the 100 tech stocks. Dividend yield of 0.34. Like I mentioned before, tech stocks don't really pay high dividends because they're tech and they're growing. So it's paid quarterly, and the cost is 0.3. Yeah, and so it's got 102 stocks, so it's more concentrated, even though it's called the Nasdaq 100. So you can see it's quite highly weighted in here as well. So the less stocks you have, the more concentrated the percentages are. So regions, mostly America. Sectors, tech, industrial and consumer. Right, so that's the Nasdaq. Oh, I think I went a little bit too far there. Right, bear with me. Right, so S&P 500 is the next one. So we're at 7.13% for the year. When I did a video about 4 days ago, it was only sitting around 5 or 6, so market's been doing okay for the last couple of days. And then over the max, you can see since January 2017, 168.4 return. So it's the top 500 companies in America. Dividend yield is 0.8%, paid quarterly, and the cost is 0.07. That's really low. So 503 stocks, even though it's the S&P 500. Usual suspects there. Regions, mostly North America, a little bit of Europe. Sectors, industrial, tech, financial, consumer. Right, we're nearly there. Right, IT. We can't have a growth portfolio without having IT in there. You should have a look at these returns. So 5% for the year, not great. But if you look at it historically, since May 2016, 663.26%. That's really good. Really good. So let's have a look. So out of the S&P 500, these are the tech stocks that are within it. So the cost, there's no dividend on this, and the cost is 0.15%. Let's see what's in here. So I've only got 71 stocks, so it's more concentrated. I mean, you can see 21.4 in Microsoft and 20.4 in Nvidia. It's highly concentrated, but it's bringing in good returns. So regions, mostly America. Sectors, tech and industrial. Right, so that's all of them. And I'm just going to go over again why I've chosen what I have. Okay, so quality dividends, that will just bring in different stocks, so it will diversify, plus you'll get the dividend. Gold, like I said, I think of as cash, average 25% a year return. Europe, so I'm just not in America. All world, so again, not just America, even though it's probably like 50% America. And the same for this core world and all world. NASDAQ 100 for tech. S&P 500 is the benchmark, and IT because it has the better returns. Now, you might think there's still a lot in there. 1, 2, 3, 4, 5, 6, 7, 8, 9. There's 9 in there. Now, if you want to copy this portfolio, you could reduce it if you wanted. So if you did just want to invest in the S&P 500, then you could copy it and then delete the other ones out. Or you could go FTSE All World 50%, S&P 500 50%, or you could go All World 90% and 10% in gold. It's completely up to you, but I've tried to pick the best of a range, so it is still based on growth and it is more diversified. Now, my other portfolio, which has even got more in, had more IT, had more banks because the banks are doing well, and I added some defence, and I've got things like Germany in there as well. So if you want to look at that other video, then go and have a look. This is more of a simplified one. Like I say, you can amend it to put what percentages you want in that you're happy with. So it's not financial advice, I'm just showing you what I'm doing, and I thought this would be a good benchmark, and then if you wanted to choose and amend it, then that would be good. I'll leave a link below if you want to copy the portfolio. Let me have a quick look at the analytics as well. So this shows the overview of the whole of these ETFs together. So regions, 56% in America, 17% in Europe, and small percents in the other ones. We'll be going over that. Right, sectors. We have industrial, tech and financial, a little bit of consumer. Holdings. Yeah, so this is what I was saying. If you were just holding the S&P 500, you'd have 500 odd stocks. But on this portfolio, we've got 3,253. So it's more diversified. And then asset class should, equity, oh yeah, got 88% in equities, and then the alternatives is the gold. So that's that. So what I'm going to do is do a weekly update to show you how the portfolio is going. I mean, obviously I've only just invested £50 in there, and there's a little bit of my cash stuck here. And I'm investing £50 a month. So if you want to follow the portfolio and see how it's doing, I've set up a playlist for this as well, so we can see how it goes. Like I say, this is, if you don't want to invest in the other things on my other portfolio, which is a more diversified growth portfolio where I've got a lot more ETFs in there. If you would like to sign up to Invest Engine, there is a link below. You get a reward, I think it's between £20 and £100 in cash. There are terms and conditions for it, but have a look in the description. If you found this video helpful in any way, please like and subscribe, and I'll give you an update next week on how the portfolio is doing. Okay, thanks.